Good evening and welcome to Mortgage Coffee Talk on Awaz TV in Canada, around the globe. Welcome. Tonight's topic is how to qualify for a mortgage. My guest today is my friend Lucia, Gugliuzzi, mortgage broker with the Mortgage Architect. Welcome. Before we begin our program, on behalf of Awaz Entertainment and Realty Coffee Talk, we thank our health worker, doctors, nurses, medical staff, and police officer helping us fight against coronavirus. We pray for their safety and we appreciate and we thank them for their service to Canadians. Thank you. Okay. Lucia, has been a long time. We haven't talked about each other, and now it's time that we are joining us on a Mortgage Coffee Talk. Would you please introduce yourself to my audience? Can you tell us about yourself?
Of course. Well, you said it, so it's been a while. So thank you very much, first of all, for having me and giving me the opportunity to give some assistance to answer some questions for people that don't know what's going on. And basically about myself, I have been in the broker industry for over 15 years. Actually, we're approaching 16 years now with a previous background in banking and in the financial service industry. So what basically I do, I enjoy helping people basically plan their lives. And I mean, what do most Canadians want? They want a home. They want a home for their family. They want guidance. They want coaching. They want assistance, answers. How can they make their money work for them? How can they fix their credit? How can they build their credit?
Yeah.
And all the beauty that comes with that. So that's basically where my passion goes.
Wonderful. As you know, the mortgages, when it comes to my mind, when we talk about the mortgage, it comes to mind that where do we go and get the mortgage? Is a consumer, they want to know what are the options, where we go, who provide them, how we go all about it. As you know, conventionally people go to the bank to get the mortgage, okay? But we also have a mortgage. You are a mortgage broker, I'm a principal broker. We have a license to practice in the province of Ontario. So then we have a lot of choices. The bank, they go to the bank, they only deal with the one bank. But when they come to us, we go to multiple banks and other sources.
Correct.
So can you share some thought about that, the difference between going to the bank or was dealing with a mortgage broker? Put a thought so we can start the process.
Of course, I can. I basically... where we differ, first of all, our main source is specializing in mortgages. Yeah. With that, it's like let's compare it to going to a brokerage, an insurance brokerage versus one insurance company.
Yeah.
The broker works for you. The broker will look at the best option for you.
Yeah.
A broker that is experienced or even inexperienced, if they have a good team and dedicated, because the trick is you really have to be dedicated in this business.
Yeah.
We will coach our clients. We will help them. We take the stress out of their hands.
Yeah.
So when people come and we ask the right questions, because we make the time. I mean, I can speak for myself. Yes. We make the time to make sure that we save them money, because at the end of the day, the more money we save them, the more money they have in their pocket. And that's how there is referrals happening, because they know they can trust their professional that helps them. Now, it is not to be misunderstood that we do use banks. The beauty is we spend the time with our clients to help them. Whereas, no offense to the bank, correct?
Yeah, that's
the
right.
bank doesn't have the time, and look what's happening now.
Yeah.
Where can they go that will give them the time of the day? The broker.
So basically, I believe that because the bank doesn't require any licensing, they're exempt, I believe. And
Correct.
we, as the mortgage brokers and agent and the principal broker, are licensed. We go through special training and education, and then we have access to multiple lenders, and then we can go and find out what product is suitable for so client. Okay, so the first thing that comes to my mind when you talk about the mortgage process, how to qualify, is a mortgage pre-approval process. So you have to think about what steps that we have to take to do that. So what step do you do when you have people come to you for pre-approval of the before they do anything? So what step do you take? Or are you still doing the pre-approval? I know before it was happening, but I don't know for the coronavirus.
Well,
what happened?
Things are changing and have changed drastically. What I do, I actually underwrite. What I mean with underwriting is I ask the questions and I obtain my paperwork up front.
Yeah.
This way, I know that provided that my client is working, that the bank is not going to say no, because I know what I have to ask. So I get my information through, are they working full-time? Are they part-time? Are they permanent part-time? Are they on salary? Do they get bonuses? Are they self-employed? Are they seniors? Do they have investments? I mean, there is so much information that I ask, because the more income I have, and the more I can work with that. And then, of course, I mean, it's not that easy in the sense that I can't say exactly all the paperwork I'm going to need, but I go through 1,000% through all the paperwork that I need. I get it up front and I say, this is how much you qualify for.
Yeah, so the process is basically when you do the pre-approval process, you determine the threshold.
Yes.
Collect all the data, and then you see that how much you qualify or what is your limitations, and based on your data. So before you start searching a house, and next step is to searching a house to hiring a realtor, you want to know how much you can afford.
Correct.
And basically pre-approval is kind of bench test mark to find out how much you qualify and where you concentrate your effort, and then you are able to look for the area and work with your team, basically. So that is getting kind of organizing yourself, preparing for buying your dream home, because this is the most expensive decision a family has to make to buy a house. So basically, once you have been pre-qualified, you already have an idea. You check with your realtor what type of property, location-wise, depending on the need of the family you already selected. Then you start the application process. Okay.
Correct.
So let's assume you pre-qualified to determine what are the offerings that are available to you and how much they qualify based on their TDS and GDS, and you understand the liabilities and the assets and income and all that stuff. So then they have already selected a property and they're going to put the offer. And when they put the offer, are you waiting for the pre-approval, or are you doing the application at that stage? Because the mortgage terms are normally people use 5 days. Some people use less. If they're pre-approved, they have a shorter period of time to get approval. So what type the mortgage application that you entertain from the consumer when they reach out to you?
So basically, let me track back a little bit because you used a couple of words and I don't want to give misunderstanding to people. So basically, when we qualify people, what I use is the income that I can use, actually the expense I can use versus the income, which is the GDS, the gross debt service ratio, and the total debt. So a lot of the times, for example, let me give you an example quickly. A lot of the times people don't realize that just because they're paying a minimal amount on their credit card, that's all we have to take to calculate their debts. But it doesn't work that way. We go into more specifics. But for the sake of just explaining, I'll just leave it at this. So this is when they come to us, and this is where I give them the straight goods, basically. So what I do, I know for a fact that when I get them a pre-approval, I actually, if they insist, I will give it to them. But what's happening these days is a lot of the banks will add a little bit of an interest rate to a pre-approval because banks have to make sure that they get their profits, correct? And this is not to talk bad about banks. That's just the way it works. So what I do is to avoid from giving them a higher interest rate later, I say, let me tell you if you qualify. And usually they listen to me because they trust me. So, but if it's absolutely necessary, because maybe we see that the interest rates are on the rise, and we want to make sure that it's okay, let's get our foot in the door, then I can get them a pre-approval. But remember that a pre-approval is only as good as the interest rate. The bank will not underwrite that deal. So this is why they come to me. I can get my paper up front. I can get my paperwork from the client. I can find out how much down payment they need. Do we need to do something else to help them increase some of their down payment? Is there some benefits that we have available to them where we can help them? This is where
we're gonna go through that. So basically, when somebody comes to you, and they come to me as well.
Yes.
We ask them, first thing is your employment information.
Correct.
Who's your current employer? What is their phone number? What is their address? The purpose the bank is using is to verify, know your client. Remember, it's a technology that we have, terms that we use in know your client. So they need to know who the employer is, phone number, address is, length of the job you have, because the longer you stay with the employer, the better it shows that you've been there with them.
Correct.
And position and title that determine the value or the income you're going to have. You're going to have salaries, and you have overtime, bonuses, and commissions. So this is how we start with it. So there are, in my last episode, we talk about these four important principles where we talk about the income, credibility, and property and other assets there. So once we verify that, do you ever call an employer to verify that this person who's giving you a piece of paper that they are working with you, that you go and check to make sure they are actually working? How do you check that?
So basically, I don't want to inundate the employers because we call, but the bank will call also. So when the employer gets calls, if we let our client know, look, do you think your employer will mind? Because actually the bank will call as well. So I am going to trust that the job I'm doing with my prospective client and that the client is telling me the truth. Because sometimes, unfortunately, it happens. We're on planet Earth.
Well, the idea is to explaining our consumer audience is that when you give information to a mortgage broker or the lender, this requires verification. So you're going to be subject to scrutiny when you are asking someone to give you the money. That means you are giving a consent to them to verify this information to be accurate, because any false information can backfire, and it's a criminal offense when you are
Misrepresenting.
false information,
Mm-hmm.
correct? To secure money, because real thing is you're asking someone, a
Mhm.
lender, to
Mhm.
give you the money. So you have to provide the honest, true document. So now it comes to when they tell you, okay, this job is done. So next comes is to the income.
Mm-hmm.
So consumer needs to know that first is your employment history that you have been working. So minimum 3 to 6 years, whatever you are working, or whatever that you
Well,
have.
no, there are people that have less employment, and sometimes we have to use a co-signer if the file is a little weak. I
Yeah.
mean, there are solutions. You'll be surprised the solutions that we find.
Yes. Yes.
You know,
That's why
I
we
mean,
have you on board today.
I mean, I've been asked by one of the banks, this person has been working only here for 6 months, and you want me to give you a mortgage? And I said, yes, I do, because
Yeah.
I am certain of what I'm talking about.
Yeah. Okay. So now we talk about the income
Yes.
verification.
Mm-hmm.
Income. So that when we talk about income, we talk about T4A or T4As or notice of assessment from CRA.
Mm-hmm.
You have a, if you are a self-employed, you have a profit and loss statement, or normally they use T1 also for that. Pension, social security, public assistance, child support, alimony. These are all income.
Mm-hmm.
So they are supposed to declare all this income. Isn't that true? Do you get all those income when you are processing application?
Well, for different folks, different strokes. There is
Yeah.
a solution, even if the employer, I'm sorry, if the employee, if the business owner does not declare as much taxable income on their taxes, there are other solutions to work with those. And they're pretty good solutions. So the thing is, the I do ask for all of that. I do analyze that. There are rules that you can also jack up the income a little bit. I won't get into too much technical because I don't want to confuse people, but there are options that people can do that legally. And banks know and they accept that. So yes, the answer is I do go through all of that. And yes, we can help people with that. And in fact, I would say maybe 50% of my clients, maybe a little bit more, they're self-employed, and I give them good mortgages. Even the seniors that have a good, they have good equity in their home. Some I can do the reverse mortgage. Some I can do outside of the normal parameters. You know, again, legally, nothing undisclosed. So
Yeah,
we help them that way.
This is what I have as a principal broker of Canada Express Mortgage Inc. I encourage people that our society is based on honest business.
Correct.
And we must pay taxes. If you want to buy a house, buying a house is a very big decision in a person's family's life.
Correct.
And you are building your empire, basically.
Mm-hmm.
And if you start making lots of money and paying taxes, the all institution, the lenders, the government, everybody supports you and you get recognized.
Correct.
So encourage them to disclose full income, because this is way to do business. If you are not disclosing my income, you're violating the Income Tax Act and you can get in trouble, because CRA can see you. You are living in a very nice house, but you're showing income.
$10,000.
They can verify that and they're going to check that out.
Yeah.
So it's important for everyone to make sure that you are paying taxes, because our society functions like that.
Mm-hmm.
Look at this coronavirus. Our government has given $110 billion to everybody's being paid to $2,000 for 4 months. And I think 75% of the pay is paid to employer because they don't want them to lay them off. they're giving loans. I have got call from all my banks.
yes.
When are you applying for the loans? I say, I
Yeah.
don't need it. I've been working the way I'm working, and I think you guys have too many buildings now empty because people are working from home. Look, you and me are talking. First time,
Right.
last time we met about 2 years ago,
Yeah.
and we're doing a seminar, remember?
Yeah. Yeah.
We're talking here. So this
Correct.
is why it's very, very important to have a good job, if not, to make sure you are creating a job,
Hmm.
and then you have an income, verifiable income. That means you will have, if you're self-employed, you have income coming, your financial statement are prepared, and those are
Hmm.
accountant certified that this is your income. And you have bank statement to verify your income if you don't have anything. And basically, if there's alimony or your child support you're getting, you can get all this information. If you somehow
Correct.
miss it, you can go to CRA, it's canada.ca. You can download all the information if there's any support coming from the government. So that's the income. So rest assured, if you are looking for someone to give you money, you got to have an income. And it's income that is a legal income, verifiable, so we can help you. Now
And
comes the asset. So can you define the asset? Normally, we have a checking account, saving account, brokerage account, that.
home equity in their homes for people that are already
Yeah, that's
homeowners. Cash savings, RSPs, TFSAs, investments that give dividends or tax or investment revenue, rental income. I mean, there is an array of assets that people can have. A lot of the times, believe it or not, I have found that people think that their equity, the unused credit on their credit cards or lines of credit, unsecured, they think I've come across that too, because I've been doing this for a long time. I've come across where people think, oh yeah, I've got money, I can get it from a line of credit, but they don't realize that that's considered 100% financing, which does not exist anymore. Gone. 2008, goodbye, baby,
Yeah.
So, I mean, this is what we're here for. This is to help them. And also, this is also to help them make sure that they don't get drained out of their assets. Because if something unforeseen circumstance, look what's happened now, at least they have something to fall back on. And
Yes.
I help them with that. Okay, this is what you want. Let's see if you can afford it. Because I don't want to see you in the street or fighting with your spouse once you bought a home,
Yeah.
So
No, this
anyway.
is very important. Let's. So basically, the asset is also if you get the gift fund from relatives or down payment that
That's
family
a
give it to
gift.
you, those are gift.
That's a gift.
And the gift is beneficial if it's not refundable, correct?
Correct. And they're
If
supposed
you
to have a
have
gift
borrowed
letter.
money from parents to buy the house, then it's going to show us as a debt.
It's going to show as a debt if they disclose it. A lot of the times parents say, okay, I'm going to give it to you when I die. I'll give it to you now and God bless you. Or if you ever want to give it back to me someday, maybe I'll take it off your inheritance. Or, they can make agreements with their parents, but we want to encourage, and this is so, so important. We want to encourage people that if they have to pay back this gift, to make sure that they disclose it, because what the bank will do, they will calculate and they will say, okay, so if you have to pay, they will treat it like a loan, because at the end, who is going to hurt who? They're going to hurt themselves because they won't be able to pay back the parents. And then who wins? Nobody, really.
See, this is the problem is lots of people don't understand that they're very casual that, I borrow the money and I put a down payment.
Yeah.
Down payment has to be verified where it's coming from. And do you have an obligation to pay back? If you pay back and if you have a loan, basically it's treated as a loan, as a liability. So your qualification will go down based on the amount that you are borrowing from your family or friends or your parents, unless they sign an affidavit, I believe, notarized, saying that this is a gift, no refund coming back.
It doesn't have to be notarized. The banks, credit unions, any type of bank, they rely on us telling them the truth, because like I just said, they're only going to hurt themselves if they take that and then have to pay back, because when they can't pay back.
The next important question comes to it. So you got an income, you got a job, you got an income, you have an asset. The other one is debt, liability. Okay.
Right.
So current mortgage, if you have one mortgage, if you're buying to buy a second property, whether it's a principal or you're going to buy an investment property, you have a liens, you have alimony, you have a child support, you have a car loans, you have a credit card, you have a real property, which we already have if somebody owns it. So those are the consolidation of debts that you really have to consolidate all your debt together. Then you can see the viability of the person, how much can he or she can afford as a family.
Correct.
So how do you experience this when people come to you? Do they give you all the information they need on the application that you put in, or do you have to ask them to provide that information?
Well, I ask the questions because first of all, I need to see where this money is coming from. And I want to make sure that nothing falls through. Like, I want to make sure that nothing at the last minute, that when the bank asks for more verification, that can't be proven. So clean hands make a happy life. You know what I mean? Yeah. So I asked them that, and believe it or not, I've experienced, my clients have been very good. I've been very fortunate, also because I can stop something bad from happening. I've been blessed that way. Now let's not look at the times that we're experiencing now with the coronavirus times. I mean, this is unprecedented what's happened. So you're going to find things that you would never see or you never think it would happen, but it's happening to everybody. So that's not an issue. But overall, I've had good experiences overall with my clients. And a lot of the times I can predict that truly, even when parents say, I want this back, by the time we close, the parents are going to say, no, I don't want this money back. I'm signing this gift letter for you because I know that you want to buy a place.
So basically, when people have a job, first is you bring the application to them, they do online application, or there's a form. People still like traditional way of doing it, scanning it, sending it out. So they verify the employment. Whatever employment you have, you have income verification is done because you pay taxes, you have a T4, T4As, or self-employed income. And then you have other avenue of income, whatever you declare income, and then you already have an asset, you already know, and then you have a liabilities, you balance them out. Normally, the total, when you're buying a house to qualify, we talk about the GDS, gross debt service. So the threshold, I believe, is 32% of the total gross income. Is that it is 32%?
No, it's actually the total goes up to 39%. It all depends on the credit score. If the credit score is low, then yes, it will go down to 32, 34, 35, depends. But if the credit is strong, they can go up to 39%. And again, it depends if the mortgage is insured, depends which bank you use. If it's not insured, meaning do people have 20% down? Do they not have 20% down? These are other regulations. So 39 is the top, the most. If it's uninsured, you could go a little higher. Again, depends on the equity of the home. We can work around it. Yeah,
this is very, very important that people have to realize when you are negotiating the deal, understanding the mortgage is a fixed mortgage, variable mortgage, open mortgage.
So important.
Mortgage. And when you have a fixed mortgage, you have a rate differential in case you need to terminate. So there's a lots of things we have talked about it in my previous show. So now the one is called GDS, which is up to 39%, but the normal standard is 32%. Normal.
Standard,
Now,
but depending on the score. Yeah.
Depending on the score.
Credit score. Yeah.
The score average, good score starts from about 700. I believe. 700.
Yes.
You still can do 650, not bad, but if you are 700 plus, you are favorably considered by the lending position. So it's very important for consumer to go to Equifax or go to TransUnion, buy your report at least every 3 months, if not 6 months, twice a year. Buy your report and print out all the reports. It will tell you whenever you have applied for the mortgage or loan or any loan, they will showing there. And if you feel somebody is abusing or misusing your information, you report them and correct them, get them corrected. Because your mortgage may be turned down if there's wrong information, data is mixed with somebody else's name, and there's a bad report coming. There's nobody can help you unless you go to TransUnion or Equifax to fix that. It happens to me when my son was going in medical 6-7 years ago, and somebody has similar name but not the middle name. Luckily, I have a middle name. It was mixed up and was a telephone some company, and I got a notice from the bank. Knew me, and the bank said, "No, we just want to let you know that we're not concerned, but just to fix it up." So it took me 1 year to fix this problem because the system TransUnion has is based on USA, and they don't. Equifax was correct on TransUnion. So because when they search the name, computer generate it, mix only first and last name. They don't pick up the middle name, and that's why if somebody has a bad data, it harms you. So it's a good advice. Now is the TDS is the total debt service. That means student loan, visa payment, anything that you owe is not to exceed 40%. Bank will go a little bit over that.
They will go to 44.
Because of your history with the bank, with the lender, because they know that you've been good with them. Because through car payment, line of credit, student loan, child support, spousal support, everything included. So this is normally is. Now, when people come to you, remember the stress test that we have?
Oh, yes.
Stress test. The stress test is 2%, and now the Bank of Canada has a 5.14 as a test for the 5-year fixed. Is that same or is it changed?
It changes with it should change automatically, but it doesn't always. And banks sometimes use a little bit higher.
Yeah.
Then they recently had announced, I believe it was in February, they announced that they were going to change the stress test and take off. Again, it gets a little bit technical. So let's be general. So we can go to 5.04, 5.14. It depends on when the Bank of Canada announces the lower rate. But what I do, you remember going back to the pre-approval stage?
Yeah.
When I do my calculation and I completely underwrite the file, I assess it, I make sure our numbers work. I always put a little bit extra interest rate there just to make sure that in case interest rates go up and that person is going to buy a home, I don't want to burst their bubble basically and then say, no, you don't qualify, because I already accounted for that. Yeah. So what I do is I always use the stress test and a little bit more, just on the safe side. Also because, and as a realtor, you know, that often people don't realize that when we qualify either GDS or TDS, we have to include property tax calculation. Yeah. And it makes a difference whether the property is brand new, meaning that it's not been assessed by the city, or the property is already built. It makes a difference, a resale basically. So what I do is, again, depending, because experience is a teacher, depending on where the property is, I can assess more or less what type of property taxes or condominium fees they're going to pay. So I assess all of that.
You don't need to guess because everything, you go to the city, on the city website,
Yes.
there is a factor there. You can take the factor and you got impact report. Everybody has impact report, multiply the factor, you get the accurate cent by cent amount.
But I am talking about a pre-approval, not about an approval. Pre-approval. No. I don't know where they're going to buy. Do they want to buy in Hamilton? Do they want to buy in Brampton? Do they want to buy in?
But don't you specify a particular location like a city?
Sometimes they say, but sometimes they change their mind.
Yeah.
You know.
That's possible. That's possible. But the idea again is to prepare them and have a built-in contingency. That's a smart thing that you're doing, is building a contingency. Because there is a closing cost involved, and you need to prepare a kind of budget. So pre-approval is kind of budget. It is the person, and when you have secure your through a property through agreement of purchase and sale, and you apply for a mortgage, you pull their credit report. You already have all the documents. I just recently received information from one of my clients. What an excellent, she has a record. In a matter of 5 minutes, I have everything.
It's beautiful.
I would love her that because she provided me everything. Yes. Everything. 3 years, excellent record, no loan, and she's lucky she has paid house. Right?
Yeah, nice.
And this is how it is, because people need to be responsible about the loan. It's just like this, including myself. We have these plastic cards. They call them Visa, the MasterCard. They're dangerous.
Yes.
Because you go out, you buy anything, you worried about pay you later, right? Average rate, good bank, maybe 11% to 22%. Yes. If you go to Home Depot, I take advantage of the Home Depot for 6 months, 18 months, and then I pay them off. They're 30% interest rate. So these are all liability. What we are trying to say is that be responsible. It's your credibility. It is your leverage that you have, that you are breaking it down by using these cards. Because even though you have a $50,000 credit limit on the card, but you only use $5,000, your full amount is used. Because you have accessibility to maximize anytime. So therefore, if you are thinking of buying a property, to make sure that you have cut down all the credit card, minimize them, so you have more funding available to you to buy the property, and you qualify for more mortgage.
And
so sorry, go ahead. You want to say
if I may interject, a lot of the times I don't advise people to cancel their credit cards, because people need a history.
Yeah.
Okay. And I don't advise people after they've had a credit card for a very long time to keep it open either, because let's say it's 4 or 5 years, the card has gone dormant already. So what I say is use it a little bit. Don't have too many, but use it a little bit and make sure you can pay them, because when you get charged 20% with compounded interest, it's even more than $2,000 for every $10,000 that people pay. And I say, let's coach a little bit. Let's learn a little bit about this. So I can lead a horse to water, obviously. They have to follow. But those are the things that I do. I provide that information to them.
So mortgage is something that consumer negotiate.
Right.
With the lender.
Right.
It's a contract.
Yes.
And they use mortgage brokers like you and a principal broker like me to help them negotiate the deal. We negotiate on their behalf. So amount of money that they're going to borrow, amortization period that suits your client, term of the mortgage. Lots of people, we explain that.
Right.
Amortization is a period where the loan has to be paid off a period of time, 25 years, 10 years, 20 years. And the term is the period 1 year, 2 year, 3 years, 5 years term. That's the term of the contract.
Correct.
And then how much interest rate that you will be paying that for that period, and is it open or closed mortgage, whatever. So these are the things that everybody, any consumers looking for a mortgage need to negotiate. And when you hire and engage a mortgage broker with their years of experience and also ability to look at many other products that may be suitable based on your report, we are required by law to protect your interest. Look at the suitability, the risk factor involved with that, and your ability to make sure that you are able to easily carry it without compromising your quality of life. Because this is, I encourage young homeowners, first-time buyers, that you don't need to buy a very, very big house right away, because this is a long time. They have a life to enjoy and they need to celebrate their life. And when they have a family, it grows gradually. And also, if you spend all the money and you buy the house and you put the big mortgages, new cars and everything, then you're always at the dinner table fighting about the bills instead of talking about comfort of the family, like enjoying each other. Correct? Is that
absolutely?
So this is any advice that you want to give to people, because I'm going to give you a little update about something about real estate, and then you go ahead, and if you got a minute, I will have an update, and then we'll go to the closing area.
So,
any advice to people?
For sure. So what I can say to people is, when they come and talk to us, be honest. Good habits will take you far. Bad habits may take you so far, but then eventually there is a collapse. What I do go through, and sometimes people just are, they're just innocent. They don't know. What is your plan? Are you a young family? Are you going to have a child? Are you going to need daycare? What are your true expenses in the house? Because I can qualify you, but let me tell you what you're truly going to pay. Now they're prepared. And then I say, okay, so if you use a credit card, make sure you can pay it. Maybe if you have cards that give you points, something you want to use that, but make sure that you don't splurge. So talk to me even after the closing, even after you've finished. Talk to me. Let's discuss. Let me help you how you can put a strategy together. A lot of the times people already know, or they think they know, and that's fine. We respect that. But the advice I give is good habits will take you far. They will last.
That's wonderful advice. So good news, because coronavirus has put us in the homes. We're isolated. We feel lonely. I don't even know if I know how to drive my car because we're working from home. I have not left my house for a while,
Wow.
And my wife goes out and gets things for me and the food and everything. I'm not allowed. My son is a doctor and his wife is a doctor in New York, and they tell me I'm not allowed to leave. If I leave the house, they will not let me in, right? Because of age, because of health, when you're diabetes or high cholesterol, blood pressure, these are the things that come with age. And
of course,
so I'm more vulnerable. And when you reach close to, not 70 yet, but close to 70, you're vulnerable. So I have less chances of survival. So it's better to be safe than sorry, right? So again, but I said people, because I'm also a real estate broker of record for City Pro Realty in brokerage, and my passion is real estate, and I help people. I said before, and I'm saying it again, that what we are facing now is a health pandemic. It is happened because of coronavirus spread overseas, came to Canada and North America and affected everybody. We never have problem with the economy. It was not an economy issue. Our government, for the safety, they shut down to avoid spread of coronavirus. So good news is that the moment this lockdown is lifted, we will have economy go back and our sale will pick up and more business will come. Now, according to, and I said in third quarter is going to start picking up, and then obviously it will boom in October in third quarter. I got a report today from TD Bank, now forecasting Toronto home price will increase 7.8% in 2020.
Wow.
This is just came in today. It says that sale was down month to month, 14% month to month. A new listing went 13% down. But the prices are going up, especially in Toronto. So I'm going to give you a look at the report here. Give me 1 second. The home prices growth is projected to hit a national average of 6.1% in 2020, compared to 2.3% last year. Last year only increased 2.3%, and they're projecting 6.1% this year. So that's a very good news. And here is in Ontario, home prices are forecast to increase 8.3% in Ontario for 2020. And while Toronto could see an increase of 7.8% compared to 4.1% last year, 2019.
Mm-hmm.
So there is a very optimistic view of what's going on. And then we can see that this is coming a good news for us. So at this says, I would say that we are in a better position. Before I give my final comment, I will give you 1 minute to please share your information with my audience, and our time is getting close.
Okay, so my name is Lucia Gugliuzzi. So most people don't know how to spell that, so I'll spell it for them. It's LuciaGugliuzzi, and they can reach me at 647-494-4200. They can call there, leave a message for me, and I'll be glad to answer any questions that they have. Of course, no obligations. We're here to help. We're here to assist in people that perhaps are going through a rough time. Let's hope that these times are over soon, even before the third quarter, because that's been far too long. I was in Italy when the breakdown happened here, the lockdown or whatever. It was no fun. So all I can say is be safe, everyone. We're here to help if anybody needs some advice, and be well.
Well, thank you very much for coming on board. So this is my closing remarks. Once again, I thank you, Lucia, for coming in and joining me and helping people to understand how to qualify for a mortgage. Basically, you have to have a job or some sort of an income,
of course,
and you have asset, and you also have verification,
down payment,
which is part of the asset, down payment to down payment. And you are basically reviewing, your information is being reviewed by competent people who are licensed to practice in real estate. If you're dealing with a mortgage broker or you're going with a bank, the idea is to be more transparent, work on it, make sure that you have the ability to secure financing to meet your needs, because having a pre-approval, getting through the process early on, building your team is beneficial to you, so you know what are you looking for, what is your affordabilities are. So I take this opportunity to thank you very much for watching our show on behalf of Awaz Entertainment and Realty Coffee Talk. we thank you all for watching. Our next show is on next Wednesday at 7 p.m. If you have any questions, give us a call. My number is 905-785-9926. And again, I thank and pray for the well-being of our doctors, nurses, police officers, and all those involved fighting coronavirus. We're hoping and praying for their safety, and all Canadians. May God bless you all. Keep everybody safe. May God bless Canada. Thank you very much for watching. Good night.
Good night.